Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, March 1st, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. The US dollar index having a counter trend bounce of 0.6% last week to now down minus 1.2% in the last 3 months alone, as it continues to signal bearish on a 90-day trend duration. You have the euro versus the US dollar correcting minus 0.4% last week and continues to signal bullish on a 90-day trend duration, now up 1.4% in the last 3 months. The Japanese yen continues to break down, now down minus 1.1% versus the US dollar as it continues to signal bearish on a 90-day trend duration. And then you have the British pound versus the US dollar correcting minus 0.6% last week, now up 4.3% in the last 3 months as it continues to signal bullish on a 90-day trend duration. On the other side of this down dollar, you have commodities and asset allocation continue to reinflate, with the CRB index, the blended 19 commodities, inflated another 1.0% last week to now plus 18.7% in the last 3 months. You have WTI oil inflating another 3.8% in kind to now plus 33.4% in the last 3 months. In the agricultural sector, you have corn and continuing its inflation higher, up 1.1% last week to now plus 27.3% the last 3 months. Then you have coffee inflated another 6.5% last week to now plus 15.5% in the last 3 months. Moving along now to the bond market and rates, you have the 10-year yield up another 7 basis points last week to now plus 52 basis points in the last 3 months. The yield curve, because the 10s has continued to steepen another 5 basis points to 55 basis points in the last 3 months. Then touching on U.S. equity sectors, the narrative is not growth versus value, but more so on rate sensitivity, as you have energy stocks up another 4.3% last week to now plus 22.3% the last 3 months. Whereas on the other side of that, you have something like utilities. Those were down another 5.0% last week to now minus 9.4% in the last 3 months. Gold in kind was down another 2.8% last week to now minus 4.5% in the last 3 months. So in sum, the numbers continue to feed the narrative and not the other way around, as we continue to be under the bias that growth inflation metrics will continue to accelerate, especially as we come into the COVID comparables. And just touching on last week's metrics here, as far as growth is concerned, you did have durable goods accelerate 6.3% year over year in January versus 2.6% in December. And then you have CapEx growth accelerate 9.1% year over year. So again, numbers over narratives. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there.